Hello, I'm Jessica Amir for the Finance News Network. With me today is Mitchell Services CEO, Andrew Elf. Andrew, thanks for coming and welcome back.
Thanks very much for having me.
So for those that don't know, Mitchell Services provides drill rigs for the mining industry right around Australia. Tell us where the business is at today.
Look, it's come a long way since we re-entered the Australian market in 2013. You know, back then we had a handful of rigs, a handful of people. The market was at historic lows. Today, 65 rigs in the fleet, over 50 running, over 400 people, and some fantastic clients and heading in the right direction as a business.
Nice. And speaking about that level of direction, tell us about your position in the market, the size of the market and the level of activity.
Our business is one of the most diversified drilling companies in Australia. We've got surface and underground operations in base metals, and we've got surface and underground operations in coal. Not many clients have got that. 50% of the business is surface operations, 50% underground, so very diversified by commodity and by different types of drilling. It really is a good business that's sustainable through the cycle and works at a lot of major sites.
And you mentioned diversification, but you've also got diversification of your clients as well. Tell us about that.
Yeah, you can think of Mitchell's like a Qantas. You know, it's a very well-regarded brand. It's been around for 50 years next year. You know, we work for the biggest clients on the best sites. So clients are BHP, South32, Evolution, Anglo, Peabody, those sort of clients.
And now can you tell us about the integration with Radco Drilling?
Yeah, Radco was a fantastic acquisition, settled on April the 4th this year. It's an underground coal drilling company, so they drain gas in advance of mining in the coking coal mines. Integration's complete, business is operating safely, efficiently. The teams have done a fantastic job. And the business is performing as expected post-acquisition. And
now to your business, just tell us about performance and share price, starting off with financial performance.
Yeah, financial performance has continued to improve. Our first quarter results released recently, I think were outstanding and a credit to the team. I think it's been many years of hard work to get those results. Obviously, our EBITDA in the first quarter of 19 exceeded FY18's total EBITDA. So the percentages are good when you look at the EBITDA percentage. EBIT percentage shows we've bought assets well, cheaply at the bottom of the market. Cash flow strong. So we've really got a good foundation now to move forward on. The business itself really performing strongly and you know, looking forward to a great end to the year.
Nice. And how has that translated to your share price?
Yeah, the share price has performed well. It's got an upward trajectory at the moment. You know, those that invested early have done quite well already. But I certainly think that the business is in the best shape it's ever been. It's on a sure footing, generating good cash, and I think there's still plenty of room for the share price to move, hopefully, if the business keeps performing.
And now can you tell us about the overall strategy and how you're really tracking with that?
The whole investment thesis with this one was, you know, Nathan, our chairman, sold his personal business back in 2008 for about 150 million. You know, it took him 40 years to generate that. This business, we came back in 2013 and the aim was to generate significant value using a public company in a short time frame, and we're on our way to doing that. You know, everything's heading in the right direction to do that. We've bought assets cheaply, we're getting them back to work, we're making some good numbers, and we've really got a good roadway ahead of us. We're going to pay down debt, keep making cash, and deliver some good results and hopefully reward our shareholders who have been pretty patient with us over a tough market. On top of that, we've also got some very supportive shareholders. You know, Sol Pattinson's a 10% holder, a second largest holder, and CVC as well, both long-term holders and very supportive. So some fantastic support from the big end of town there, and a lot of other large institutional shareholders sitting underneath those two as well.
Great endorsement indeed. And lastly, Andrew, where would you like to see the company this time next year?
Look, I think we'll be in an even better position. The business will keep performing. It's going to keep producing cash, keep making good profits. We've got $30 million of tax losses available to us, so we won't be paying tax anytime soon. The main thing for us is just to stay safe, keep looking after our clients, do a good job, and hopefully reward our shareholders who have been patient with us through some tough times.
Wonderful. Andrew Elf, thank you so much for your time.
Thank you very much.